You know, it looked like every metric that I could find, you all did better than the street was anticipating. Do you see any weakness when it comes to the consumer right now?
You know, home improvement is a little unique, and the demand drivers for home improvement are distinctly different than the demand drivers for, let's say, home building. So when I look at Lowe's, the three highest correlating factors to demand are home price appreciation, and the average U.S. home has roughly $330,000 in equity. The age of housing stock is another one, and the average U.S. home is roughly 40 years old, the oldest since World War II, and also personal disposable income. And although economic times are challenging, we still have roughly $1.2 trillion in excess savings versus pre-pandemic. So when you look at all those factors, those things bode well for home improvement, and we feel really good about our current trends.
You had strength coming from contractors and professional builders and from the do-it-yourself crowd. Do-it-yourself, I think, is about 75% of your revenue, so that obviously matters, and that's where people have had questions. Would the consumer hang in there? You didn't see any slowness towards the end of the quarter. I'm asking this just because Home Depot, when they talked about this yesterday, they were talking about how they were getting some mixed signals. It doesn't seem like you are.
Well, Beck, what I can tell you is that for the entire year, we really had strength in the pro segment of our consumer base, but in the third quarter, we actually saw the do-it-yourself customers start to come back. So we had actually the best DIY performance of the year in the third quarter. Now, when you look at the specific categories throughout what we sell, you know, there's a little bit of a mixed bag, but overall, we see customers trading up. So you always hear the phenomenon that people are trading down. That's not happening in our space. You know, we introduced a Maytag washer specifically to deal with pet hair. It's one of the most expensive washers we sell, and the response to it was incredibly positive. So we're seeing customers trade up for innovation. We're seeing customers trade up for discretionary items. Our Halloween sell-through was really strong, and there's nothing more discretionary that you can buy for your home than Halloween. And our current Christmas trimming tree trends, you know, are reflective of pre-pandemic trends, which is exactly what we anticipated. So we're not seeing a slowdown. We're not seeing customers trade down. We're not seeing customers pull back. And I just think that the definition or the redefinition of the home is something that we're still living with coming out of the pandemic. I don't think any of us can view our homes the same way as we did 3 years ago. And I think the home improvement sector is just a benefactor of those trend shifts.
Marvin, let's not gloss over that pet. If there's a lot of pet hair on clothing, it gets it out or something. I watched someone try to clean a jacket yesterday with using tape around, you know, and trying it, and that didn't work. And we can't find a vacuum cleaner strong enough to pick up the hair from two German Shepherds, Marvin. So but that's not what I want to ask you. But let's not gloss over that. What I did want to ask you, so housing prices go up, people feel good about their house, they got equity to do improvements. Housing prices go down, they don't think about selling, so they stay home and do an improvement. Which is more powerful a factor for you and Home Depot? When people are stuck in their houses because the housing market's weak, or people are able to sell their houses and move somewhere else? I just can't see. I think it'd be good for you to do well in both scenarios.
Well, that's true. So if you go back to the 1990s, it's really the last time we had a situation where interest rates were going up and we had some degree of inflation. And what we saw is home improvement demand stay strong. So let me give you a couple of factors. So we still, in the U.S., have roughly 1.5 to 2 million homes under current demand, which means we still have a shortage. And roughly 90% of homeowners have either a low fixed mortgage rate or they own their home outright. So the action being taken by Chairman Powell and the Fed is not really impacting homeowners with a fixed rate or who own their home. So the interest rate environment is not directly impacting how they feel about their most important asset. And also our data tells us that through 2025, we're going to see 250,000 millennial buyers per year enter the market. And I remember back a few years ago, many people thought that millennials would move away from owning and be permanent renters, and that's just been the opposite. Some of our strongest home improvement and home buying trends are coming from millennial customers. So all of the things work for us, but the fact that homes are getting older, And when homes get older, there are things you have to get fixed. And 2/3 of what we sell is non-discretionary. If your roof is leaking or you have an appliance that breaks down, you can't choose to ignore it. So that also supports our business trends.